what's very common in all of the consent orders is that they are looking at the BSA AML programs, since we've had so many problems with the financial crimes, especially in money laundering and those types of activities.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Welcome to Wrestling Payments. I have a very special episode. If you recall, if you've listened for a while, last year we spoke, and I'm here with Nanci McKenzie, and we had to stop ourselves from speaking because it just got so interesting. And today we're basically here for a part two. Now, Nanci, we're at PMC 2024, and Nanci just got out of a session on third-party relationships. And I want you to introduce yourself.
Okay. Nanci McKenzie with Nanci McKenzie LLC. I'm an independent consultant, and I have my AAP, my APRP, a couple of law degrees, and
Law degrees.
yeah, third-party relationships, risk management, what all banking organizations need to know.
Yes. So over time, third parties kind of snuck up, right? There were relationships, and then regulators and agencies started going, we need more there.
Yeah.
So last year, if I recall,
Yes.
we left off with something was about to finalize. Can you take us from there?
Sure, yeah. Our interagency regulators of the OCC, the FDIC, and the Federal Reserve Board of Governors, they started looking at the guidance that had been out in our industry to help financial institutions, banking organizations, as they refer to them in the guidance, about how, we really need to kind of give more guidance on what banking organizations need to do when it comes to the third-party relationships. And as you had mentioned, like changes that we've seen in third parties over the years has really kind of gotten muddy, right?
Mm-hmm.
It's sometimes very difficult to determine what that relationship really looks like. It's not just for vendors anymore.
Right.
That relationship can be in a form of any sort of service or product that you are offering to commercial non-consumer customer or member, whether that be in your treasury management services or if they are a vendor of yours. So yeah, the interagency guidance approved the guidance on June 6th of 2023. They had been looking at revising it since 2021.
Oh.
So it took them a while to actually come to it, but they now specify fintechs within the document. Yeah.
Excellent. It seems always the case. It takes a while. Do your homework,
Yeah.
and they develop their answer. They let everyone know, and then they decide. Is there an easy way? So one of the things we do at NEACH all the time is talk to people about, do you have a third-party sender, right? Not the same. Mm-hmm. And one of the questions, if you wanted to boil it down for a third-party sender, is if you send out entries on behalf of someone else.
Right.
Is there any sort of question to say, how do I know this is a third-party relationship or not?
Yeah, I think that there is a key that if you have a non-consumer possible third-party relationship, that you can look at and go, are you providing a service or a product? Is that third party providing a service or a product to a consumer? Mm-hmm. That's who we're talking about. We know in today's world, the consumer protection and data protection is very, very strict, very stringent, CFPB, FTC, all over the place. Mm-hmm. So we need to look at those relationships and determine, okay, are they offering a product or a service that is going to affect a consumer? I think that's the major question that we need to ask.
Are they offering a good or service that relates to a consumer?
Correct.
Does it have to be on behalf of the institution?
No.
Okay.
No. So I know you had my presentation open, and there are pages in there where it specifically states what it is that we're looking at when we're talking who is a third party. It states specifically on page 30 of the document that where a third party relationship is involving the provision of products or services to or other interaction with customers.
Okay.
So customers being those consumers. And then going on further, the banking organization and the third party may have varying degrees of interaction with those customers. So we're not talking about only the customers that would be within the bank, but customers of any bank.
And when you say page 30, it's of the interagency?
Guidance,
Okay.
yes.
Excellent.
Yeah.
And is that, you know, FFIC is funny. Once you finish that interagency guidance, is it going to point you to other guidances as well?
Yes, it does to a certain extent. So first off, let's not confuse the FFIEC guidance with the interagency guidance that just came out. So the interagency guidance that just came out last year, June 6th, it rescinded, okay, the other guidance items that we had out there, such as the third-party relationships risk management guidance from the OCC, the third-party relationships conducting due diligence on financial technology companies, a guide to community banks, OCC, third-party relationships, frequently asked questions to supplement OCC Bulletin 2013-29 from the OCC, and the automated clearinghouse activities risk management guidance from the OCC. You'll find that on page 4 of the guidance. So if we're still referring to those pieces of guidance that we had previously, we can't.
Is that ACH one, the 2006-39?
Yeah, it is.
Really?
It is.
Oh my God, I've counted on that for so long.
Yes.
So now we're replaced.
It's replaced.
Okay, that's good to know. Really, it was a really good document.
Yeah.
Really outlined a lot of things, so I'm hoping.
So what they've done is they've really combined these into one location. So we have one piece of guidance to refer to now. So we did bring over a lot of the information that was on those other pieces of guidance, but now we have it all in basically one place. So yeah, just know that that's an important thing, because there are some things in there that don't relate anymore, because we have seen a change in third-party relationships since 2006, since 2013.
A long time.
Yeah.
I do note that FFIEC and interagency, which is a little bit less, right? It's only a few of the
Yes.
organizations. It is not a law,
No.
but it's really good guidance. So if you're struggling with third-party relationships, do I have one? Don't I have one? This is probably the new first stop for you.
Yeah, you're exactly right, Joe. This interagency guidance that I'm speaking of is the interagency guidance of the OCC, the FDIC, and the Federal Reserve Board of Governors, where the FFIEC is those three, as well as the state regulators, the CFPB, and the NCUA. Okay,
You're really smart.
yeah. So one thing that I just want to point out that is really important, and what I really have been what I've been saying, preach this year, is that on page 66 of this guidance, for those that are regulated by those three regulators, it states specifically, each agency will review its supervised banking organization's risk management of third-party relationships as part of its standard supervisory processes. That says will. It's not maybe or they could. No, when you're going to get your examination from one of those regulators, they will be asking for this. And we have seen that in the consent orders that have been coming out as lately, right? And a lot of them, OCC and FDIC especially, but the Federal Reserve Board of Governors have done a couple as well.
Can we dip into that for a minute? Consent orders. So
Sure.
you know, this is evolving, right? We started out with, hey, there's these other companies helping us out. And now we're at the next stage of interagency guidance on third-party senders or third-party relationships. What have those consent orders found, if
Yep.
and where's it going?
Okay. Yeah. So what's very common in all of the consent orders is that they are looking at the BSA AML programs, since we've had so many problems with the financial crimes, especially in money laundering and those types of activities, but just financial crimes overall. So the anti-money laundering, risk management programs, and the lack thereof. Lack of compliance, lack of committees, lack of just the risk management overall, investigations maybe not being done properly. They're all very similar in that way, and they are tying almost every single one of them. You're going to find a section, and I had a sample in my session that was article number 5 of this particular consent order I had, and it was titled third-party risk management. And they're all very similar that way. So they are tying the BSA AML risk management programs into these third parties because, as you know, BSA is requiring the financial institutions to periodically review those high-risk customers or members that they may have, right? To see if there are some additional risks they're being exposed to. Are they somebody that you still want to do business with or not? Are there some suspicious activities going on that maybe an AML technology program didn't pick up? What is that process of investigation? Are they doing it thoroughly? Is there a process in place that they are doing, proving that they're doing, going through the SARs that are being produced? Are they being reviewed again to make certain that they're keeping on top of their customers that way? They go hand in hand. And as I say, if you don't think that they go hand in hand, you better think again, my friend, because they do. And in all of those consent orders, they are tying all of those things together. So it's more, I believe, in my opinion, you don't necessarily see it in the consent orders, but it's more about an enterprise risk management program. So overall, and they're very similar in nature, but of course very specific to the risks that are involved in a particular area of the bank, whether that be BSA, AML, whether that be ACH operations or wire transfers or merchant RDC or loan servicing. You need to look at all of those as a overall view, but also individually because they all have different risks.
So I don't want to sound dumb, but I accept it. From a third-party management perspective, when you mention, BSA findings and other findings like that, to what extent is the third party responsible to have compliance programs, BSA programs?
I'm glad you asked.
That wasn't even set up. That's awesome.
So also last year, we had another change in the Gramm-Leach-Bliley Act under the Safeguards Rule. That came out on June 9th of 2023. The Safeguards Rule, as part of the Gramm-Leach-Bliley Act, required financial institutions to have an information security program. That information security program having very specific components within it, especially a qualified individual to oversee the entire program, making certain we have, the MFAs, we do our risk assessments, all that type of thing. June 9th of 2023, they changed it to include third parties.
No way.
Yes, they sure did. So anytime we're doing due diligence on our third parties, whether that be the vendors, whether that be our relationships that we have with third parties, we should be making certain that they are following what the Safeguards Rule says about having an information security program in place. And what I really would suggest for that piece of your due diligence is to identify if they are not only having the information security program and all of the components that go along with it, and it states it very specifically within the Safeguards Rule, but also if they are required to do a SOC 2 audit as a software as a service or a technology firm that's providing solutions to a financial institution, that SOC 2 audit, especially the type 2, is being done, because that really is showing proof that they do have a full-fledged information security program in place.
And I don't want to pick your brain, but I will pick your reading or your reports from the industry. How big a problem is that for third parties not having it?
Well, that's really an interesting question, because who is it that's going to come into the third party and say, shame on you, right? They aren't regulated in the majority of the cases, right? They may have a regulatory body that's overseeing them, depending on what they are doing, what kind of a third party they are. But the important thing is that as a financial institution, to make sure that their third parties are in compliance is only going to help themselves make certain that the ODFI or the financial institution is in compliance, because the downfall of that third party could be the downfall of the bank. And we have seen that in some of these consent orders. The reason why the examiners have come in to look at their third party risk management program is because they had a third party that was doing some things that was questionable under the SEC.
So I try to stay away from this topic as much as I can, but when Graham Leach Filali and BSA officers, those positions come with a little more risk as far as
Absolutely.
you're responsible, right? So that's scary.
It's very scary. I've never been a BSA officer, and that's the reason why, because they have the oversight of the program. And if the program is not operating the way that should be, because the risks aren't identified, they aren't following their own processes or practices, they aren't having all of the correct components in place, they're responsible. And we've seen that in some of the financial institutions, that the BSA officers have been let go. Some of them have even been fined, civil penalties against them, because they do not have their programs in place. So, that qualified individual, we really want to make certain that they are a qualified individual and that they are making certain that the compliance is in place. And that does include making certain that the third parties have their compliance in place. So the banks aren't the regulators over the third parties, but since the third parties need the banks to push the payments, the banks are the ones responsible.
Yeah. So if winding down from a conversation perspective or from a business perspective, let's set the scenario. You set yourself up and all of a sudden you realize, you know what? We have been onboarding more third parties lately. I think we need to take a second look at this. What are some of the best questions in approaching potentially a third party that's not aware? And I'm sure it happens, we're not going to name any names, but aren't aware of their BSA requirements, their SOC 2 requirements. How does that conversation begin, given that we're using this third party, we want to use this third party, they have a really cool solution we want to implement? How do you begin that conversation of, this thing called compliance?
Yeah, that is an interesting one. Well, I think first you have to really separate the third party and what their actual relationship is with the financial institution, because if they're offering ACH origination, that's going to be different than if they are just a customer of theirs, or maybe they are offering a solution to them. So there's different categories that we need to be determining what those questions should be. But one of the very first things is that when it comes to compliance, I think, is their risk assessment. A company needs to do a risk assessment. Information security program within the safeguards rules says you should be doing risk assessments. Let's see, when's the last time you did a risk assessment? Were there findings? Were remediation done? Has it been cleared? Have you had an audit? An audit that is either for ACH purposes or maybe an audit because of the SOC 2. When was the last time that was done? Were there any findings? Was remediation done? So I just recently was doing a consulting gig for a business, a fairly small business, looking for a service provider to not only do their payments, that was the main reason, but other things. They had the ability to provide reports and just give some good business information on the customers that they had. So some of the questions I was asking as the consultant for the due diligence was just those things. I need to see your risk assessment. I need to see the last time it was done. How about your business continuity plan? What about your incident response plan? I need to know that you are making certain that the service level agreements, those SLAs, will be in place, because we're relying on you to provide services, whether that be to our customers, whether that be to your customers, whether that be to us. So we have to determine what third-party relationship we are actually talking about. Does that make sense?
It does make sense. And I think if we're talking to third parties out there, just a bottom line, if you have a consumer solution, you're an app developer who's developed we talked about a lot of this at this meeting. I want my son to know that I'm trying to take out $10,000 because his son is in jail. I want to know that. In that case, consumer data would be involved.
Right.
And if I'm that company, the technology is awesome, but the compliance stuff needs to take place as well.
Absolutely.
Yeah.
You know, and in today's world, it's not just the financial industry, but in today's world, data protection, data privacy, huge, huge issues that everybody has to be not just aware of, but concerned with. And where is my data? Who has it? Who has access to it? And when you have these third-party relationships, we also need to identify that. What data are we talking about that they have? It's that old saying that I think is new, but who has the most data at the end wins, right?
No, I never heard that one actually. I thought it was toys or stuff. Do you want to, just for a second, take a side road? Data privacy.
Yeah.
Not OCC. Who's looking at 1033 open banking?
That's CFPB.
CFPB. The idea that my banking data is mine.
Right.
And if I want to share, and I took a peek at this, it's 299 pages.
Yeah, I only took a peek at it too, so I haven't
But
read it all.
the idea is it's my data, and if I want to give access to my bank account to someone else a company to do stuff, that should be okay. That's what they're exploring,
Yes.
but that's going to come with greater privacy.
Requirements.
Would you like to
elaborate on that?
Yes.
You know, I feel that it's going to very much complicate things even more, make things very much more difficult for us. But on the other side of things, you know, I said this recently about the CFPB, love them or hate them, we really need to have them in place because the consumers of the world are their own worst enemies. And,
Yeah.
you know, just to try to protect themselves from doing really dumb things is something that, you know, I don't know if we're instilling the idea to people that they can be stupid and nobody has to be responsible for it themselves. They always blame somebody else. But on the other side of things, when it comes to data privacy, the 1033 is, I think, again, I haven't read all 299 pages of it, but it's trying to get us more in alignment with the GDPR.
Yes, the world, right?
Yes.
You know, the really interesting, the U.S., you know, after World War II is a leader in the world.
Yeah.
And then all of a sudden you hear these stories in payments of England implementing faster payments and
Yeah.
Europe, the EU implementing faster payments. And we go, well, we don't actually have a faster payment program. Maybe we should do that. The
Yeah.
UK with GDPR and
Yeah.
you know, it really was, I'm not going to go into it here, but it was really a clamp down on data down to, I found this example hilarious. If a post office has a list of houses where they have to be cautious of dogs, that is protected information.
Yeah, that's crazy.
Crazy, but
Yeah.
but again, we are leaning that way. We are, in order to do the open banking, I think we have to go that way and close down some of the data just to protect it.
Right.
But
Yeah. That could be another session. We could talk about GDPR and data privacy.
excellent. No, and you know, the only thing with GDPR, honestly, for the audience as well, people hear GDPR as in anyone with any European, citizen.
Yeah.
GDPR applies, but we're in Massachusetts or Connecticut today. Well,
Yeah,
you know,
we have financial institutions that have customers that live in the EU.
very true.
And so it affects everybody globally. And when it comes to the GDPR, it's about, no, I shouldn't say about, it is just as complicated as Bank Secrecy Act. And And when you have your DSARs that you have to do and your DPIAs that you have to do, it's just like, whoa.
Yeah.
Are we going to get into that too? It's like, but so again, when it comes to the 1033, I think that it's got a long way for us to, maybe that could be another session for us too, because it's going to probably take some time for things to get weeded out.
So here's the plan.
Yeah.
You go ahead and read all those pages, and then we'll have a session.
Okay. We
Excellent.
can do that.
All right. So tune in when we cover that. But thank you for joining me.
Yeah. Thanks for having me.
I will have you again. I enjoy talking to you all the time. Thanks, everyone.
All right. Thanks.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.